Assalamu alaikum wa rahmatullahi wa barakatuhu. Yes, let's get started. I'll start sharing my screen. Yeah, so the topic today is rules of Sharia equity trading and how Islamicly App can help you. This is a very important topic. It's a topic which will help you get the best benefit out of the Islamicly App and will set you up as to how you can use the Islamicly App and set yourselves up to trade or to take the benefit of the capital markets in a Sharia compliant manner. Let's get moving. Yes, the agenda. Inshallah, today we will be covering rules of Sharia equity trading and how Islamicly App can help you. This is the most important section which will take the bulk of today's time. Then we will also spend some time to understand what to do if stocks turn non-compliant, as well as what to do if we invested in non-compliant stocks. Lastly, we will do the purification rules for Sharia compliant equity trading, inshallah. So let's get started with the first question. So rules of Sharia equity trading. Let's address the elephant in the room first. So is investing in stocks considered Sharia compliant in the first place? A lot of you might be convinced, but for the benefit of people who are joining us new, I would like to take a couple of minutes to help them understand why investing in stocks is considered Sharia compliant. So I will not get into the deep details. You can refer to our previous webinars on these specific topics. I'll just go through this at a very high level so that we get an understanding that what is right and what is wrong. So buying stocks of companies which are Sharia compliant is permissible from Islamic perspective. There's widespread consensus among Sharia scholars for this. Hence, trading in Sharia compliant stocks is considered as a halal source of income. There is absolutely huge amount of consensus among contemporary Sharia scholars that equity investments in Sharia compliant companies is a permissible business activity, is a permissible source of income for Muslims. Yep. So what are Sharia compliant companies or stocks? Very simple. Sharia scholars over the past 3 to 4 decades have framed certain rules to ascertain if a company is Sharia compliant. Firstly, they established that investment in a company is Sharia compliant. Now they went ahead and asked what kind of companies can be invested in. So Sharia scholars have framed certain rules to ascertain if a company is Sharia compliant. Such rules are called Sharia. So a listed company passes the Sharia equity screening criteria. It is called a Sharia compliant company. So if a company listed on a stock exchange passes the Sharia equity screening criteria, then that company is called a Sharia compliant company. Investment in such companies is permissible and is considered Sharia permissible. Let's move along. So what is Sharia equity screening? Very, very briefly, I will touch upon the points over here. The detailed explanation has been in previous webinars. You can read all of the detailed explanation about why and how the Sharia equity screening criteria works on our website as well, which is www.islamicly.com. You can access it from the app as well. So what is Sharia equity screening criteria? The Sharia screening criteria sets out the rules of how to screen listed companies to find out if they are permissible for investments by Muslims. So these are the rules by which we will screen listed companies and ascertain which companies are Sharia compliant. 2 levels here, the business sector screen and the financial sector screen. The business sector screen. So companies that derive less than 5% of operating revenue, that is or active business activity related, from the below non-permissible areas pass the sector screening. What I mean to say over here is if a company's operating business activity contributes to more than 5% of the total revenue from the below sectors, then the company will be considered non-permissible. But if it is less than 5%, then the company will be considered as permissible. So what are the non-permissible activities? Alcohol, definitely. Pork, tobacco, interest-based activities, pornography, gambling, conventional entertainment, trading of gold and silver on a deferred basis. So these are the areas from which the company should not derive more than 5% of its operating activity or its operating revenue. If the company passes that screening, then it is subjected to financial ratio screening. There are 3 financial ratios which are listed, which a listed company has to clear to pass the financial ratio screening. The first is interest-bearing debt. That is the debt the company takes, which is interest-bearing, to its 36 months average market cap should be less than 33%. Please bear in mind, the denominator used over here is not just current market cap, it's an average market cap, so that there is stability in the ratio, there is stability in the compliant universe of the companies. So the first and the most important ratio is interest-bearing debt to 36 months average market cap should be less than 33%. You also have a cash ratio which needs to be applied. So which is cash plus short-term investments divided by 36 months average market cap should also be less than 33%. The third ratio which applies for a company to be qualified as Sharia compliant is accounts receivables ratio divided by 36 months average market cap should be less than 49%. If all 3 ratios are below the mentioned threshold, the company is said to have passed the financial ratio screening. Now, why are these ratios applied? There is again a YouTube channel by the name Islamicly as well, wherein you can understand why and what these ratios stand for. I will not be taking much of your time in this webinar because we are more focused on rules of equity trading rather than the screening criteria. If you would like to understand why the screening criteria has been applied, please go and refer to those webinars. So essentially, if a company passes this screening criteria, the business sector screen plus the financial ratio screen. Remember, it's a plus, it's not either of. Business sector screening plus the financial ratio screening, then the company is said to have been classified as Sharia compliant. Next, a company which does screening, that is business sector screening as well as financial ratio screening, is said to be Sharia compliant. Investment, common equity of such companies is permissible for Muslims. Now the question then comes, where can I find Sharia compliant stocks? The simple answer is Islamicly App. Our app lists more than 45,000 stocks globally and displays real-time Sharia compliance of stocks. So on the app, you can select the market that you want to access: US, Canada, Mexico, Germany, UK, US, India, Pakistan, China, Indonesia, Egypt, Saudi Arabia, Kuwait, any market that you want. Alhamdulillah, we have coverage on that. So Islamicly App lists 45,000 stocks and gives Sharia compliance information on all of these 45,000 plus stocks in real time. Now the question again comes in, which class of shares is permitted for investment? As we all know, there are two major classes of equities. So investment is permissible only in the common equity of the company. Remember that. So you can only invest in the common equity of Sharia compliant companies. Investment is not permissible in preferred equity of the company. Now, I will not want to get into the reasoning of all of these things. Inshallah, that's a topic for some other time. But it is pretty, in just one sentence, I would like to say that where risks and rewards are equal, that is the common equity. Hence, investment in common equity is permissible. Whereas in preferred equity, since they are given in liquidity, they might also have a hurdle in terms of the payout from the dividends. It could be cumulative, non-cumulative. Hence, the Sharia scholars have deemed preferred shares as a non-investable class of equity for Sharia compliant investors. Only common equity can be invested in of Sharia compliant companies. Now, again, a very important question. Can we invest in Sharia compliant stock for dividends or for trading? Equity listed companies being permitted, reason it has been permitted, so that you participate in the business of that company by providing capital, that is by subscribing to the equity of that company. Now, in exchange of that, can we get dividends, which is considered Sharia compliant, or can we trade that stock as well? Trade is the difference in pricing and the gain that we make from difference in pricing. The investment getting a dividend in a Sharia company is considered permissible from a trade. Also mentioned try to take advantage or to play the price or trying to make a gain of the difference in pricing is buy low and sell higher. That also is permissible. Now, this is also spoken in the EOFI Sharia 21, section 3(2). The basic rules of Sharia compliant equity trading, right? There are two basic rules that we need to follow to ensure that investment strategy is Sharia compliant. The first is buy first, sell later. So you can only do long only positions. So you need to buy the stock and then sell later. Secondly, the inverse of it is, short selling is not permissible. So the paradigm over here is you cannot sell what you don't own. All right. So that is in detail mentioned in the EOFI Sharia Standard 21, 3(6). So the thumb rule over here is you need to buy first and then sell. The inverse of that is you cannot do short selling. It is not permissible. I'm going a little fast today because I know that this is Ramadan. People do not have a lot of time to go through these things. So inshallah, we will try and wrap it up quickly. But please do stay tuned. I will have to give you a very good news at the end of this webinar. And inshallah, you will like it. And you will try and spread it as much as possible so that the entire community, your WhatsApp groups of investors can also benefit, inshallah. Let's move on. So again, the essential question comes in, when can I sell shares? A lot of people say, okay, I've bought the equity, I've bought the shares. Now, is there a time period that I should wait, or can I sell it immediately, or do I have to wait for a couple of days? What is the ruling over here? So the basic rule is that as soon as you are the owner, remember, it's highlighted as well. The basic rule is that as soon as you are the owner, you can sell your shares. That is, if the risk and reward of that stock transfers to you, then you are the owner and hence you can sell that stock. This is clearly also mentioned in the EOFI Sharia Standard 21, 3(7). Okay, all of these are public documents. You can access it very easily from the EOFI website as well. So the basic rule is that as soon as you are the owner, you can sell your shares. That is, if the risk and reward of that stock transfers to you, then you are the owner and hence you can sell that stock. The inverse question that a lot of people will ask then is, so do I not wait for delivery of that stock in my DMAT or digital wallet or the custodian? So getting a credit in the DMAT or share registry is not a necessity to prove your ownership of that stock. Yes, having a deposit or having a credit into your DMAT or your share registry or your digital share depository is help you in proving that you are the owner. But if you do not have, it doesn't hamper your ownership. Look and study your documents. Look at the documents. All stock exchanges mention this clause. So getting a credit in the DMAT or share registry is not a necessity to prove your ownership of that stock. Execution of trade. Since the stocks are digital in nature, you are deemed to have received possession of that stock. So that settles it very clearly. This again is derived from the EOFI Sharia Standard 21, 3(7). In addition, it has been discussed at the Islamicly Sharia board as well. And the Sharia board is absolutely crystal clear that if the risk and reward of that stock transfers onto you, your broker has confirmed the execution of that trade, you have fulfilled all the liabilities or all the conditions of being the owner of that stock, that is by paying the relevant price and by paying the brokerage to your broker, you become the owner of that stock. you do not have to wait for credit of that stock into your digital wallet or your demat account to claim ownership on that stock. So it then boils down to the question, so is intraday trading permissible? A very hot topic, although it has been settled quite a long time back, but the answer is yes, intraday trading is permissible. Because of all the previous conditions that I spoke to you about, that when you bought the stock, if you become the owner of that stock, you can sell it immediately post that. You don't have to wait for getting it delivered or credited to your digital wallet account, your shared depository account, or the demat account, no matter what it is being called in your jurisdiction. As soon as the risks and reward of that stock transfers onto you, which can be evidenced by probably execution of that trade or a note by a broker that the trade has got executed, and you fulfilling the obligation of paying for that stock, you become the owner, hence you can instantly go ahead and sell that stock as well. There is absolutely no harm in doing that. It is a clear understanding and a clear discussed point at Islamicly Sharia board as well, that intraday trading is permissible, but there are conditions to it. Definitely you need to buy first and sell later. You cannot do short sell at that point in time in intraday. Your intraday trading contract should not restrict you from obtaining possession/delivery. What I mean to say over here is that if you broker a contract that you use or the option that you use, option would by option I mean the feature on your brokerage platform that you use restricts you from taking delivery. If you intended to take delivery, then that will not be considered permissible. I'll repeat, your intraday trading contract should not restrict you from obtaining possession/delivery, although you may not take delivery. All right. In other words, if your broker auto squares off your intraday positions, that means there was no delivery or possession intended, and it would make the intraday trade non-permissible. So if the intention was never to take delivery and you use that kind of a contract with your broker to trade intraday, then that trade is considered non-permissible. But if your broker gives you the option of converting the stock, converting your trade into, or gives you the option of taking delivery, although you may not choose to take delivery, that is because you would have sold it before market closed, that would still be considered Sharia compliant. So these things have to be taken care of. So is margin trading also permissible? Yes, it is permissible, but the condition is your broker should extend the margin or leverage without interest. There should be absolutely no amount of interest. All other conditions of Sharia compliant trading should also be met. That would also mean that if the broker is giving you leverage and also allows you to take delivery by paying off his loan or by rolling over his loan given to you, which is interest free, then margin-based trading is also permissible. But as usual, globally, when a broker lends you some money and lets you trade using a margin or gives you leverage to trade, he would automatically square off your trade before the end of the day and recover his money. If that is the condition, then you're failing the previous condition of intraday trading. Hence, that will not be considered permissible. It's pretty simple. 1 + 1 + 1 is equal to 3. All the three conditions should be met. Else intraday trading or margin-based trading or investments in equity, one of these conditions will fail, and hence your income from that trade might become non-permissible. All right. All of this recording will be available on YouTube, on our Islamicly YouTube channel. We have the webinar number 22. We have 21 webinars in this series that have been published, which have more detail. Don't worry, all of this is public information, free information for you to take benefit of. Let's move on. Couple of other questions that people ask. Is swing trading permissible? Swing trading is you buy today, probably wait for a couple of days, 2-3 days, and then you sell. Why not? If you're the owner, you can sell. So yes, it is permissible. Since you become the owner of that stock before you sell it, Delivery by credit to your demat or share depository is not an essential condition to your proof of ownership. So swing trading is permissible. That is, you buy first and you sell later. As soon as you buy, you become the absolute owner of that stock. Risk and reward lies with you. You can go ahead and sell it whenever you want. Whether you want to sell it the same day, which will be called intraday. If you want to sell it in a couple of days, that's what people call it, swing trading. All right. Now, those were the rules now of trading. But you also have to be cognizant of the nature of Sharia compliant investments. So is Sharia compliant status of stocks dynamic or static? So once you established on Islamically that a particular stock is Sharia compliant, you applied the rules that we spoke about in the previous slides, and you went ahead and started trading. Alhamdulillah, which is a very good thing to do. But you need to be cognizant that if a stock was compliant, let's say on 1st of January, will it in its lifetime remain compliant? Let's study that. So as we saw, Sharia compliance can get affected due to changes in the business composition, the changes in fundamental data, the changes in market cap. So if that was a criteria, right, that we studied. So if changes in business composition occurs, so let's say a company was getting revenue less than 5% from a non-permissible activity, in the next business period or in the next accounting period, revenue probably shot up to more than 5%. That company will fail the business sector screening in the next accounting period. So this usually affects the company annually, because we get that data, screening providers get that data annually. In the quarterly reports, the revenue breakups and the compositions are not very clear. Hence, we will not be able to make that assessment. So companies might become non-compliant, which is earlier compliant, due to business composition changes once a year. So the possibility of stocks changing compliance is definitely real. Now, changes in fundamental data. Fundamental data is the debt number, the cash number, the accounts receivables number that the company has to disclose every quarter, right? It could quarter on quarter throw the ratios above the threshold, or it could bring the ratios below the threshold as well. So this piece of information affects quarterly every Sharia compliant stock. Changes in market cap. So the financial ratio that we have to calculate is the numerator is the fundamental data, the denominator is the market cap. Now market cap changes on a daily basis, which is 5 trading days. Hence, that stock will get affected by changes in market cap on a daily basis. Alhamdulillah, Islamicly app updates the data on a daily basis, 5 days a week, so that you have the most up-to-date Sharia compliance information on your fingertips. So we are probably the only app in the world in this space which tries to give you real-time compliance of Sharia compliant stocks. As you can see, I've picked up 2 screenshots of Apple and Microsoft. You can see here, last updated 20 hours ago. I took the screenshot just about now and published it. So since today is a Saturday, it was published yesterday. Today it was not published. It is 20 hours ago that it got published. So you can check whether the data is fresh or not by checking out what is the last updated time on the app. This is a feature which no other service provider does in this industry. Let's go on. Now that we know that stocks are dynamic, they do change compliance. So let's understand what has to be done in those scenarios. So what to do if your stock turns non-compliant? If your stock turns non-compliant, that is, if you invested in a stock which was Sharia compliant and it suddenly became non-permissible, what is it that you need to do? There is a detailed webinar that we conducted. You can go and refer to that as well. But I have covered most of these scenarios in this presentation as well. So if your stock turns non-compliant, you have 90 days grace period to exit that stock. Okay, so let's say your stock turned non-compliant on the 1st of Jan, roughly about by 31st of March, you can still continue to hold that stock and then sell. Okay, so all gains within the 90-day period are considered permissible. So even if you sold about, let's say, 80 days after the stock turned non-compliant, whatever gain that you made will be considered permissible. So any gain that you make after expiry of the 90-day period has to be purified fully. That is donated to charity. So let's say you sold the stock on the 10th of April, right? Which is on the 100th day. So from the day the grace period expired, 90th day, that is 31st of March, till the 10th of April, approximately, whatever gain that you made has to be donated completely. You cannot retain that. But whatever gain you made in the first 90 days can be kept as compliant. It is considered permissible and can be retained fully. No problem at all. Okay, a couple of other things. You cannot trade the turned non-compliant stock within the 90-day grace period. That is, you cannot buy more units of that currently non-compliant stock. We've had a couple of questions that have been posted in the Islamicly discussions group. A lot of your questions can also get solved in the Islamicly discussions group. So if you go to the app, on the home page itself, you come down, you can see discussions. Click on that, there's tons and tons of discussions. We recently analyzed that there have been more than 1,000 questions that have been put to us in the past 1 year, and alhamdulillah, we have answered all of those as well. So what I was saying, getting back to the topic, let's say a stock has turned non-compliant and you now have 90-day grace period, right? Although any return that you make of already invested stock, if you sold it off prior to the 90-day grace period expiring, that will be considered permissible. That does not mean that since that stock is now non-permissible because it is in the grace period, you can go ahead and top up your holdings in that stock. No. It would be considered as an investment in a non-compliant stock. So the additional investment that you make within the grace period will be considered a non-permissible investment, right? The grace period has been given for you to exit from a compliant stock which turned non-compliant 90 days so that you can take an informed decision, and probably the best decision that the best decision that can be taken. Just 1 second, I will probably stop this share and see if everything is fine. I hope my voice is clear. Sorry, I think I logged off, but I'm back now. Just 1 second. Yep, let me share my screen again. Yeah. Let's get back to our previous slide. Yeah. So you cannot trade the turned non-compliant stock within the 90-day grace period. That is, you cannot buy more units of that currently non-compliant stock. Now, if the stock turns back to being compliant within the 90-day grace period, right, you are good as you were. So let's say, for example, on the 1st of January, your stock turned non-compliant, and by, let's say, 28th of Feb, it became compliant again. That can happen because the company might have disclosed newer financial numbers, or the market cap would have got adjusted, or an umpteen number of factors which affect the compliance of the companies, and it becomes compliant again within the 90-day grace period. Then absolutely no action needs to be taken. You are as good as you were. Just think of the scenario that the stock never turned non-compliant. So everything is fine. There is absolutely no action required. And that's the reason the 90-day grace period has been given, to protect the investor's interest as well. Moving on. So if your stock turns non-compliant and you are under a loss, this is one of the most popular question which comes up in the discussion. So if your stock turns non-compliant and you are under a loss, what is the thing that you need to do? It is highly recommended that you exit that stock within the 90-day grace period. So you may have to book a loss for that matter. So 90 days is absolute. There is nothing more than that can be tolerated. But the Sharia scholars also give permission that you may also hold that stock till you recover the initial investment and then exit. So let's say till the end of the 90th day grace period, you still are under a loss. So Sharia scholars do give you permission to keep on holding that stock till the price comes back to your initial investment price, and then you can exit. As simple as that. Okay. Now, let's see which is the best way of doing it. Do note, all the time that you are invested in that non-compliant stock, from a structure perspective, you are considered a partner in that non-compliant business. So what do you want? Would you want to be a partner in such a business which is non-permissible, or book a loss and exit? So that's the question that you need to ask yourself. So the ruling is, it is highly recommended that you exit that stock within the 90-day grace period. But even post 90-day grace period, if your investment is still under a loss, you can continue holding it till the time you recover your initial investment. But the essential thing that you need to know, that while you continue holding your stock which is under a loss of a non-compliant company, you are actually considered a partner in that non-permissible business. So would you want to continue being named as a partner in a non-permissible business rather than book a loss and exit, is the question that you need to decide while choosing whichever option you want to go with. So another question which comes up is, can we deduct transaction costs from the amount that needs to be purified? Now, let's say you have exceeded, or you have made a non-compliant investment, or any amount that needs to be purified. Can we deduct the transaction cost before we purify those amounts? I will talk about purification in the end, just about a couple of slides from now, and you will have a better understanding as to what I'm trying to talk about. But the answer to this question is yes, transaction cost of only that trade can be deducted and the balance needs to be purified. What I mean to say is, if a stock which needs to be purified or a gain which needs to be purified, on that if you incur a taxation or if you incur a transaction cost or a brokerage cost, only that part can be reduced. Do not try and offset this amounts with the entire taxation that you've got to pay, with the entire brokerage cost that you've got to pay across all your portfolios. No, only the proportionate, which is applicable to that trade, to that stock which yielded non-permissible income, which needed to be purified, only that proportionate transaction cost can be netted off and the balance can be purified, can be donated. Another interesting question which comes up is, if two stocks turned non-compliant, one was in profit and the other was in a loss, can I net off gains from one stock with the loss of the other and donate the net gain? Example, you have Apple and Microsoft, for example, okay? And both of them turned non-compliant and you've got to exit both of these stocks. Now, let's say Apple was in profit and Microsoft was in a loss. Can you offset, let's say you made a profit of $1,000 on Apple and you made a loss of $500 on Microsoft while you were exiting the stock within the grace period, or after the grace period, after the grace period, can you net off the $1,000 with the 500 loss that you made and then purify only the 500? The answer is no. Okay, so if two stocks turned non-compliant, one was in profit and the other was in a loss, can I net off gains from one stock with the loss of the other and donate the net gain, if any? No. Both the stock investments are separate contracts and separate companies. They need to be treated independently. You need to donate all the gains from the profitable stock. So if, for example, you have made $1,000 profit from Apple, which is non-permissible, for example, that is you held it even after the grace period, then that $1,000 have to be purified separately. You cannot net off the loss. But yes, if you have different trades that you have done in the same stock, then you will have to take it as a consolidated position. Very simple, right? If it is the same stock, then you can net off. If it is different stock, you cannot net off. That is the principle over here. Now, the inverse of it, what to do if you invest in a non-compliant stock, right? So there can be two scenarios. That one, you inadvertently invested in a non-compliant stock, or you invested in a company before you knew that there is something called Sharia compliance of stocks. In whichever scenario, the first time you come to know, you are in a position that your investment is non-compliant, right? By default at the start of it itself. So if you invest in a non-compliant stock, the Sharia board is absolutely clear that you need to exit within 7 days, right? And donate all the gains that you have made on that stock. So if you invest in a non-compliant stock, one, you need to get out within 7 days. Two is you need to exit. You need to donate all your gains. Simple as that. Right? Now, how to track when my stock turns non-compliant? Okay, this is an essential question that needs to be addressed as well. Just 1 second. I just stopped sharing my screen. Just trying to see how many questions are there. We have come to probably the end of our discussion. So if you have any questions, please do put it. I'll probably wrap it up in another 5 to 7 minutes, and inshallah, I will take all your questions. Okay, let me start sharing my screen again. Yeah, so how to track when my stock turns non-compliant? Alhamdulillah, Islamicly app updates you on a daily basis if the stock in your portfolio or watch list have changed compliance, right? So Islamicly app updates you instantly whenever the stock changes compliance, so that you can figure out when your stock changed compliance. This is how it is. So you get a notification, and this is a section. If you see the section, today compliance changes. One stock in your market has turned halal, and the other has turned, and other two have turned non-halal. If you click on this, you can see it this way. So in Canada, this is what has happened on Friday. Canfor Corporation's basic materials, Canfor Corporations, which is into basic materials, has turned compliant, whereas MindCure Health Inc. has turned non-compliant. Now, similarly, since I have multiple market subscriptions, I can see that in the United States, VNE, Veoneer Inc. has turned compliant, right? It is as simple as that. You get an instant notification as to when a stock changes compliance. So you can be up to date as to when and how your stocks are Sharia compliant or not. That is the reason we always recommend that once or twice or thrice a week, you should definitely come on the app and have a look at whether your stocks are Sharia compliant or not. The easiest way to do it is whatever investments that you make through your broker, create a portfolio on the Islamicly app as well, and it will instantly tell you, instantly track whether any of the stocks in your portfolio have turned compliant or have inversely turned non-compliant as well. So do keep coming regularly on the app. So Islamicly app, Islamicly desktop version also shows the historical compliance of stocks. So let's say if you missed to know when the stock turned compliant or turned non-compliant, Islamicly desktop version gives you historical information as well. So you can go back and check. This is how it is. I've just picked up the screenshot of Mara which is into technology, Marathon Digital Holdings Inc. Now, as you can see over here, it's currently non-compliant. Okay, currently non-compliant. Now you can see historically what is compliance is what. The red part is non-compliant, the green part is compliant, and the red part again is non-compliant, right? And if you click on view history, which is next to that star button, you can see the historical compliance. So historically it was compliant, then it became non-compliant, then compliant again, and then non-compliant. Now since I've taken a screenshot, you can't see the dates, but if you hover around over here, if I go to the desktop version, you can probably see it over here, right? Now this is Reliance, for example. You go on view history, and you can see the exact date when it turns non-compliant. Can you see? On 6th April, it turned compliant. On 5th April, it was still non-compliant. So that's the power of the desktop version, that you can see historically when it turned compliant or non-compliant. Let's get back. So worried if your investment may turn non-compliant? So if you're thinking that stocks are dynamic, should I invest in stocks or not at all? Because if I invest in a Sharia compliant stock, it might turn non-compliant. So if you are worried about that, a very simple solution what we have on the desktop version is the compliance risk factor, which is given out over here. So let's say I've picked up Reliance Energy over here. Reliance Energy was non-compliant, and then it has become compliant now. Now, whether this will remain compliant or turn back to non-compliant is what the compliance risk factor will tell you. What does it say? It says highly likely to turn non-compliant. That means the ratios are borderline. Given the trend of the market cap movement, it is highly likely that this stock may turn non-compliant again, right? Now, this is Reliance Energy. So if you click over here, you can see this heat map comes up. It is on the red side, which says highly likely to turn non-compliant, right? So this you can take a stand that do you need to enter the stock with a long-term view or with a short-term view. So this is how Islamicly App can keep helping you in your Sharia compliant investment journey. This is the last part of my presentation, and then inshallah I'll move on to the questions. Dividend purification. Now we understood that there is a 5% tolerance in the beginning of impure income, right? A lot of you might have put questions already that why is any small percentage of impure income or haram income tolerated, and why are we being a part of it, right? I would not get into why this has been given out, because the Sharia scholars have taken care of it, and they have given out the opinion that this is an acceptable way of looking at investments into equities. But since they allowed up to 5% impure income in Sharia compliant companies, there has to be a purification of it. That purification is called dividend purification, right? Let's study what is dividend purification. The percentage of all non-permissible income of the company to its total revenue is calculated. This ratio has to be applied on all dividends that you receive from the company. This amount needs to be purified, that is donated to charity. This process eliminates all impure incomes from your investments in that stock. Very simple. Okay, this is a detailed one. So dividend purification ratio is all non-permissible revenue, including interest income, divided by total income. Now, what needs to be purified? Purification needs to be applied only on dividends. Okay, capital gains are not to be purified. Why is this? There's a detailed webinar as well on our YouTube channel. You can go and listen to that as well, inshallah. A dividend purification ratio can be higher than 5%. So if the tolerance limit of impure income is just 5%, why would purification exceed 5%? It can, and there is a reason for that. So yes, purification ratio can be higher than 5%. Example, the non-permissible operating revenue. Remember, this is because operating and non-operating revenue bifurcation. So non-permissible operating revenue is, let's say, 2%. Right? The stock will still pass the sector screening. And non-permissible non-operating revenue, let's say interest income or any other non-operating revenue of the company, is 4%. The total is 6%. The entire 6% needs to be purified. So whether it is interest income, operating or non-operating, everything gets combined at the purification level, and that has to be purified. That makes your investment devoid of any impure or haram income. That is the reason purification is applied. So dividend purification ratio can be updated annually on Islamicly app. Yes, because companies disclose their revenue breakup annually, which helps in ascertaining the impure income. So dividend purification ratio, which is available on the app, is updated annually as soon based on the annual reports of the company, where the revenue breakups are more detailed, and using those that kind of information, we can ascertain what is the purification ratio. So dividend purification ratio is, when do you want to purify? It is best to purify dividends as you receive them. So whenever you get a dividend from the company that you invest in, just go to the Islamicly app, punch in that dividend that you received. Instantly, you will get the amount that needs to be purified. So if you receive them quarterly or semi-annual or annually, purify as you get it. Select the last date of the period, and you will get the purification amount on the app or web. It is an instant feature on the app or the web. Now, whom to give the dividend? You can donate this amount by giving it to anybody whom you deem fit. So it's absolutely up to you as to where and how you want to donate this amount. But do not donate this to mosques, because this is impure money. The way you cannot donate it to madrasas or mosques, any impure money, is similarly the purification that you need to conduct out of this stock investments cannot be given to mosques, because this is impure income. Again, the same question has come up. Can I deduct the transaction cost and tax amount on the purification amount before donating it? I'm repeating myself. Yes, you can proportionately deduct the transaction charges and transaction charges on the purification amount before donating the balance amount. Last thing, how do you get started? Very simple. Get a subscription to the Islamicly app. Get to know which stocks are Sharia compliant or not. Create a portfolio on this stock on the Islamicly app to ascertain how you're performing. When you are certain, when you have to go and execute that trade, you can open up any of these stock broker accounts. None of these brokers are affiliated with us. Islamicly is an independent research organization. You are free to open up any broker account. Try and follow the rules that I've spoken about in very simple language. If you are following the rules which we spoke about today, you track the Sharia compliant stocks on the Islamicly app, go ahead and trade the stocks on the broker of your choice, and inshallah, your investments will be Sharia compliant. That's it from me, and let's get to the Q&A session right now. But before that, before I get to the Q&A session, I would like to make a small announcement regarding what we have done so far and why we are doing something special this Ramadan. I will take probably 1 or 2 more minutes and introduce you to that. This Ramadan, we complete almost a year of existence. The response to what we have done has been nothing short of being phenomenal. We are extremely overwhelmed. We're extremely humbled. We're extremely delighted that the kind of support that we received from the users of the Islamicly community has been massive. As you can see, the Islamicly app has been opened more than 1.2 million times till now. More than the number of stocks searched on the Islamicly app has been 1.2 million times. Stocks have been searched. The app has been opened up more than 500,000 times in the past 1 year. You have requested us to screen more than 13,000 extra stocks, and we have obliged. You have asked us more than 1,000 questions, and we have obliged. More than 2,500 questions have been posted in the stock discussions, and we have responded to all of those. Jazakallah khair for all of this. So it's time for us to give back, right? And hence we have launched this campaign called Islamicly Give Back Day. I'll just share my screen so that you can have a look at what we're trying to say. We have the Islamicly Give Back Day, which we have come up with. It's launching on the 8th of May 2021. We had just about 100 stocks that we had to give away, but if you tweet or retweet like or share the campaigns, or send it through your WhatsApp groups. We will keep increasing the slots. As you can see, we launched the campaign just yesterday, and by now about 81 new slots have opened up. So 181 slots are up for grabs. What is it in it for you? So if you're a free user as of now, or a non-paid member of the Islamicly app, on the 8th of May, it is our time to give back the love that you have given us. So Islamicly Give Back Day, 8th of May, is a thank you thing for the love. It's time to give back on the 8th of May. Annual subscriptions as low as just $9 to $19. App plus web, both. That's what we're giving. So Islamicly Give Back Day, 8th May, 24 hours only. Annual app plus desktop subscriptions for as low as $9 to $19. Absolutely no code required. Come on the app on the 8th of May, inshallah, and avail the best giveaway that we could give. If you're skeptical that you might not get the slot, then please do share and retweet all our social media campaigns, or you can just click on any of these and tweet, or share it on your LinkedIn profile, or just click and copy this link and share it on your WhatsApp pages, on your WhatsApp groups. It's the best once a year opportunity for us to share the love that you have given us. We would like to welcome thousands of members. We don't mind opening up thousands of slots if you make this as popular as it deserves to be, probably. Inshallah, we will open up thousands of slots if you keep tweeting, keep sharing it on Facebook, keep liking our Facebook campaigns. Remember, 8th of May is a hashtag Islamicly Give Back Day. 24 hours, the lowest it can ever get. It's not a sales campaign. It's a give back. It's our love to the Islamic community. It's a giveaway that we'd like to conduct just for one day, this Ramadan, 8th of May, 2021. Let's get to the questions now. All right. I'll start taking the questions. One by one. Yep. Abdul Razak is asking a question. Assalamu alaikum akhi. Ramadan Mubarak. What are your thoughts on the point of view that some people have that stocks such as McDonald's, which sells haram meat products, and stocks like Exxon and Chevron, which sell alcohol, are impermissible due to them selling products that are haram? These questions have been discussed at length in the Sharia board. The answer to this is the revenues from such non-permissible activities is less than 5%. I mean, for example, McDonald's, I have personally called them up at one point in time, and they have told me over the phone that the input that they have across their restaurants of pork as such is less than 2% of the entire purchases that they do. So hence, since they were not able to disclose the revenue from selling exclusive pork-based products, this was presented to the Sharia board, and the Sharia board clearly said that this seems to be a good basis for keeping it compliant because it seems to be less than 5%. So the rationale for all of these things is that the revenue from non-permissible activity is less than 5%. That's the reason these companies have been kept permissible. Tabish asking a question, is intraday halal? I've answered that question. Ifra is asking a question, what is preferred equity? I think you can Google it to get a more detailed information about why preferred equity is, what is preferred equity. But the reason why preferred equity is non-permissible is, the reason is that they have preferential treatment over the other class of shareholders. Islamic rules of dealing does not promote preferential treatment to one class of investors over the other for no good reason. Secondly, the returns to them in some cases are fixed. That is, the dividends paid to them are fixed. The third reason is they have preference in terms of liquid at the time of liquidation. So they are not actually exposed to the risks and reward of the company the same way as common equity holders are. That's the reason preferred shares are not considered a Sharia compliant class of investment. Muhammad Usama Parvez is asking a question: which type of future trading is permissible in Islam? No type of futures and options and swaps are considered permissible. So futures, options, and swaps, irrespective of whether the underlying share is compliant or not, is considered non-permissible. It is very clear. Islamicly Sharia Board also says it's absolutely non-permissible. In addition to that, AOFI Sharia Board, including the AOFI Sharia criteria, AOFI Sharia Standard 21, also gives a detailed explanation as to why swaps, futures, and options are considered non-permissible. Okay, Muhammad Osama Parvez is again asking a question: is intranasal trading permissible in Islam? I'm not sure what that means. I'm assuming you meant to say that intraday trading. I said intraday trading is permissible if it is subject to the rules that you have to follow, which have been elaborated today. Bin Muhammad says, where the 5% benchmark came from, can you please point us to the dalil? What if a Western company has 7% of non-halal revenue? If the company has 7% non-halal revenue, that is very simple. Arithmetically, that 7% is more than 5%. It will be considered non-permissible. The threshold is 5%, right? There is a detailed, if you ask for dalil from the Quran and the Hadith, then I would like to ask a counter question. Were joint stock companies available at the time of the Prophet? The answer is no. Hence, something which is not available will not have a hadith available. But it is the constant discussion between Sharia scholars at very, very high levels. I mean, including the Islamic Fiqh Academy, the International Islamic Fiqh Academy, the AOFI, which has got like 15-20 Sharia scholars, tons and tons of Islamic banks globally, including banks which have billions of dollars under management, and various academics as well have debated on this, and hence they have come to a conclusion that 5% non-permissible income can be tolerated, but it has to be purified. So if you ask a question that is it written in the hadith of the Quran, my answer is no. I have not come across anything of that sort. By the way, I'm not a Sharia scholar. I just follow the rules that the Sharia scholars have made. I have just recently, this morning, answered a very detailed analysis as to why this 5% is put in place. Please go to the app and read that. I will probably convert that into an article as well and post it. So the answer to this question is the 5% rule has come from the discussion between Sharia scholars at various levels, and it has stood the test of time as well. Yes, certain other Sharia boards will have a different view on it. Some people say 2%, some people say 3%, but 5% is the majority where everybody stands at. Adib is asking a question. Salam, if a company sells haram products, example pork, alcohol, etc., less than 5% of operating revenue, why is the stock halal? The answer is that's the criteria that has been built. So you keep that company halal and you are allowed to invest in it, but using the purification mechanism, you remove that gain to that proportion from your income. That is the mechanism that the Sharia board has come up with. Now, this has been done because the global financial system where we live in, the global economic environment where we live in is not conducive to Sharia sensitive financial matters. It's a given fact. I mean, we at Islamicly have also conducted a research on all the 45,000 global companies that we cover to ascertain if there are companies which have zero interest income, zero interest expense, zero non-permissible or non-halal income, absolutely no interest generation in the company, and there is all its activities are conducted in accordance with the Sharia principles. Surprise, surprise, we just found just less than 200 companies in the world, and most of those companies are in the Middle East region, and a few of them are in Pakistan, Indonesia, and Malaysia. I mean, I don't think that can comprise of an investable universe as of now. So we do classify such companies on the Islamicly app. If you go to the advanced filter and you take 100% compliant, you might not return any stock if you're not in those markets, if you're not subscribed to those markets. That means in US, UK, Canada, Australia, Hong Kong, Singapore, China, India, you have absolutely no company which is 100% Sharia compliant. So either you sit on the fringes or you start making something as a change. So that's what the Sharia scholars have gone with, that they would like to give you a chance to get into the equity investments, because structurally, a joint stock company which is listed is a Sharia compliant structure. But if it has some amount of impure income, that can be tolerated but removed through the purification mechanism as well. Bin Muhammad is asking the same question. For the last 10 years, my company gave me restricted stock units as part of my compensation every year. It passes all the screening except the business one. Non-compliant revenue is 7.5%. I was not aware of all of these screening criteria until this year. In the past, I was told to only purify the stocks whenever whatever non-compliant revenue. What should I do? On what basis I need to do the purification? It's pretty simple. This has been discussed at the Sharia board level as well, that if a company which is non-compliant due to whatever reason gives restricted stock options or any kind of stock options to the staff which works at that, you can retain the value of the stock when it vests in you, right? But you cannot retain the gains that you made on that stock. So the value at which it was given to you, that value is actually compensation for your services. That value can be retained, but the gain that you make by being invested in this stock, that gain will need to be purified. That is the ruling of the Sharia scholars. Iqbal is asking a question on Bitcoin. Apologies, we are not handling cryptos, so we will not be able to answer that question. But yes, Bitcoin mining companies are permissible if you're asking me that question, because that's a technology that is being used to mine. Bitcoin trading or crypto trading is something that we're not going to answer to. But Bitcoin mining has been discussed in the Sharia board, and they have been absolutely clear that it's a technology process. It doesn't involve anything non-permissible as such. Hence, mining companies will be considered permissible. Trading, we are not giving out our opinion. Muhammad Usama Parvez says, is physically settled future trading permissible? Absolutely no. So whether it's physically settled futures trade, or if it is just a book entry at that point in time wherein you exchange the premiums, whatever it be, it is non-compliant, because you do not become the owner of that stock at the time you're trading it. Taha is asking a question. Since we have established the fact that intraday trading is permissible subject to certain conditions, do the same rules apply as to which stocks we can buy and sell? For example, can I take an intraday position in a non-compliant stock? Really? Definitely the stock has to be compliant if you have to do intraday trading. That's the basic principle. Nothing can be done on a non-compliant stock. Simple as that. Abdul Razak is asking a question. Assalamu alaikum, akhi wa alaikum salam. Can you give us more information on where the 33% ratio for permissibility came from? The Quran explicitly states that all interest is haram, and I don't see these major corporations getting interest-free loan. Jazakallah khair. I understand the Sharia scholars also empathize with this question, but as I just said, that we live in a financial environment which is not conducive to Sharia-sensitive investors. We need to make some start somewhere. So basis the hadith that 1/3 is enough, is more than enough. That hadith has been used for making the rule that 1/3 debt to the company's market cap can be tolerated. Inshallah, as the number of investors in the Islamic community grows, the Sharia scholars are looking to probably tighten this from 33 to probably 30, then probably 25, then probably 10, then probably 0. But it needs that Sharia investment grows, so that managements of companies are forced to take or borrow, or to deposit or borrow funds in a Sharia compliant manner. So if the shareholders do not put pressure, or the shareholders do not wish, or they're indifferent to these things, then definitely all of these things will keep continuing. So if the shareholders say that I do not want to do this, or they put pressure on the company's management that you should adhere to these kind of rules, why won't they do that? Simple as that. Today, if you see, ethical, social, and green concerns, ESG concerns have become a key part of boards. That is because the shareholders have started putting or questioning the managements of the companies, have started questioning the boards of the companies that why don't you follow ESG norms as well? Hence they do. It costs them money. It reduces profitability probably, but they still do. So we need to make some start. This is a very detailed topic which was handled in one of my previous webinars. You can go to a YouTube channel and have a look at that. But yes, there is no doubt that any amount of interest cannot be tolerated. But given the financial world that we live in, the Sharia scholars have said that a company which takes interest-based loans but restricts it to less than a third of its value can be treated as a Sharia compliant company. And inshallah, as the number of investors grow, these ratios can be tightened as well. Muhammad is also asking a question. My company has a program called ESPP that consists of locking a stock price for 2 years. My company takes off 2 to 10% of my salary and buys discounted stock every 6 months. Can I stay in this program? If I sell my stock immediately, I can configure easily a quick scale option in my brokerage account. They will be sold as soon as they're vested. Absolutely. As soon as they're vested, you need to get out of it. Any amount that you get from it is Sharia compliant. The gain that you make will be considered non-permissible if the mother stock is non-compliant. If the company that you work with, which gives an ESPP program, is compliant, then absolutely no problem. Let that money be in. The gain that you make is also Sharia compliant. Nasir is asking a question. Is trading currencies on the spot market halal? If yes, is it acceptable to be traded with margin if your broker gives you a swap and interest-free margin? Is trading currencies on the spot market halal? Trading currencies on spot basis is halal as long as you make the exchange of the counter values immediately. So if you're trading currencies, that is, you're giving dollars and getting pounds, you're giving, let's say, euros and getting pounds instantly. At the same time, yes, it can take a certain amount of time to settle. That's considered compliant. But if there is no physical exchange of currency, or if there is no physical transfer of funds between one point and one party to the other party, then currency trading is considered non-permissible. If you're referring to any of the forex trading apps which are available on the market, none of them let you do the physical side of it. That is, you give them dollars and you get back pounds. That never happens. It is always a settlement of money. That's it. And they never use spots. That's what my understanding is. So the forex apps which are around are definitely non-compliant. Currency trading, Sharia standard number 21 of AOP talks about that. It says currency trading on spot basis where both the counter values are exchanged at the same time is permissible. If there is a delay in any one of them, then it is non-permissible. Simple as that. An exchange of counter values with possession. That is also a condition over there. Bin Muhammad says, what should I do with ESPP I acquired during the past while I was not aware of these screening rules? Assuming business screening fails of that company, the ruling has been given to you. It's up to you whether you want to retain whatever has been given in the past, or you need to purify. The ruling is that you can only retain the actual amount which came in, and any gains that has been made over the years has to be purified. Shakil asks a question. Assalamu alaikum. Does AOP mention about receivables as 49% as mentioned in this webinar? AOP does not mention this accounts receivables ratio. Secondly, in our previous webinars where we have compared our screening criteria to AOP screening criteria, we've clearly mentioned that EOFI screening criteria can at best be considered as a guidance factor. It is not a screening criteria. The reason being that it does not explicitly mention what is in, what is out, what has to be applied, how it has to be applied, and the nuances of it. It's a guidance for people who need to follow things without a Sharia board. Alhamdulillah, Islamicly has a Sharia board, which we have been working with for the past 21 years now. They are the pioneers in this industry. They also have been founders of the EOFI Sharia board. The deputy chairman of the EOFI Sharia board, who passed away last year, was also a member of the Islamicly Sharia board. Dr. Al-Ghari, who is the current chairman of our Sharia board, is a key member in the EOFI, including the board of trustees at the EOFI. So it does not mean that we are very different from the EOFI. We are convergent with the EOFI. We're not divergent with the EOFI. So at best, EOFI is a guidance for a detailed criteria which is actively managed, is what Islamically follows. We go back to the Sharia board with all the questions and then try and improvise the criteria and keep it live and relevant to the needs of the financial world and be as sensitive to Sharia as it could be made. That's the reason we have a more detailed screening criteria than EOFI. Bin Muhammad is asking the same question again. What if we do not know when the stock turned compliant? You can come to the Islamically desktop version, put that stock, and you will get to know when that stock turned non-compliant. Simple as that. And if you are saying that if I do not know and do not have an Islamic subscription, you now have tools available in the world. So being ignorance will not work probably. Shoaib Amir says, where are the links for the previous webinars? All the previous webinars are available on the Islamicly YouTube channel. You can just go to YouTube and search for Islamicly, the same spelling as the Islamicly app, and you will get our YouTube channel. Subscribe to it so that you can catch up on all the next updates of the webinars which gets published over there as well. Okay, couple of more questions over here. One Muhammad Azhari is asking, Assalamu alaikum, how frequent the compliant Sharia stock become non-compliant? Not very frequent, not very frequent. But then yes, if you have this huge market and huge market crashes, then there is some churn. But the reason we use a 36 months average market capitalization is to ensure that the instant or the spikes and the downside of the stocks doesn't move the stock between compliance and non-compliance. It stabilizes it over a 36 months average market cap average time. Somebody is asking, why is it 90 days grace period? It is not based the hadith and the Quran. It is based on practical conditions in the market, such as to ensure that least amount of loss is being given to the Sharia sensitive investors, because we are a very small community as of now. So it is more of a promotion. Inshallah, as we go along, this could probably become 60 days to 30 days, and probably 7 days as well as we go along. But the 90 days has been given so that there could be a new financial which can come out, which can probably make the stock back to compliance. The stock prices might stabilize again, which can bring the stock back to compliance. There could be market conditions wherein liquidity factors can also be taken into consideration. There could be a point in time where the investor might not know as well whether his stock has turned non-compliant. But if he's not looking at his portfolio once in a quarter at least, then it is his fault. So given all of these parameters and all of these exigencies, the 90-day period has been given as a grace period. Mustafa is asking, there is a Sharia compliant ETF, MSCI World Islamic. According to them is halal, but I can't find it on Islamicly app. What's your thought? We don't actively cover ETFs as of now. That's one of the reasons why it might not be on the Islamicly app. But if an ETF has a Sharia compliance certification given by a Sharia board, then you are most welcome to go ahead and invest in it. Kabish is asking a question. Can you please tell me the app where I can trade globally in all markets? Trading questions I will not be able to answer, unfortunately. Muhammad Amir, what about intraday and short selling in intraday? I've already answered that. Intraday is permissible, subject to conditions. Short selling in intraday is not permitted. Shahzad, can we get the recording of this webinar? All recordings of the webinars are available on our Islamicly YouTube channel. Muhammad Wazid Ahmed, what about short selling? It is totally haram. Yes, it is totally haram. Why is it 90 days grace period? Why not 60? I have answered that just now. Irfan, thank you for sharing the hashtag, but you need to share it outside this ecosystem as well. Thank you for the support. Yasser says, if we buy stock below 33% debt, say for example 20%, should we purify the amount debt from profit? Absolutely no. If a stock is less than 33% in terms of its debt, it is classified as Sharia compliant. Nothing to do. The purification is not dependent on that. I have explained the purification process. Please do read the articles given on our blog, which talks in detail about purification. There's a detailed webinar also on our YouTube channel about purification. It's a very simple thing. On the Islamicly app, you have the purification amounts given. You just punch that dividend that you get, and you instantly get the purification that you need to do. All of it is being made so simple for you. Ghulam says, I bought a stock unknowingly, which was non-compliant. I've answered that in the presentation as well. You have 7 days to exit. Shoaib Amir says, most of the stocks pass other criteria but fail cash compliance in the app. Any specific reason? I don't know what stocks you're referring to. If it fails the cash compliance criteria, it fails the cash compliance criteria. How to purify 401k if investment options are limited or pre-selected blended funds by employer? Unfortunately, can't be purified. Ghulam says, if the price dropped, so I am low, can I keep it until I gain my capital? The answer is yes, you can do that. But it is always recommended to exit that stock immediately within 7 days. I've explained the rationale as well. Short selling is not permissible because you are selling something which you don't own. That is why short selling is not permissible. Is there a limit on non-operating, non-compliant income? No, there is no limit. If a company fails cash compliance, does the whole investment become impermissible? Remember this thing. A company is either compliant or it is non-compliant, right? We never wanted to give out the breakup of whether it is cash compliant, debt compliance, or accounts receivable compliance, or business sector compliance. I mean, the Sharia scholars were not in the favor of giving it out to retail investors, the reason for non-compliance. But for transparency reasons, we gave it out. Please understand, and this is a very serious matter, that if a stock is classified as compliant, it is compliant. If a stock is classified as non-compliant, irrespective of what the reason be, the criteria has classified it as non-compliant. It is non-compliant, not permissible for you to invest, period. Iqbal says, can you please share the list of 200 companies that you mentioned? It's on the app. You need to subscribe to probably 7-8 markets globally, and just select the filter of 100% and you will get that companies list. If you are, for all you know, you may not be able to invest in those companies because 75% of those companies are in Saudi Arabia, which has a restricted investment environment. That is, outsiders may not be allowed to invest in those stocks. I think I have answered most of the questions, and I'm coming to the end of it. Farhan is asking a question. I had started investing in December in the Indian stock market. I chose stocks based only on business activity, which were halal. The point is that I had bought and sold non-compliant shares between that period and got decent profits. Also, at that time, I had no idea about investing in Sharia compliant stocks. What should I do? The answer is very simple. Since they were non-compliant stocks, you need to purify the gains that you made from those stocks. But you can take the alternate view that you did not know about it, and henceforth you will not probably go ahead and invest in non-permissible activities. The choice is yours. Under what circumstances gold or silver trading halal? It's the same circumstances as applicable on currencies, because gold and silver are considered as currencies in Sharia. So the exchange has to happen instantly. The counter values have to be dispatched instantly, and possession of cash and gold exchange has to be done instantly. When I mean possession, constructive possession, it doesn't mean that you have to physically hold that gold while you trade. Yes, we understand that global trade involves the gold and silver to get shipped and get transported, and then it comes to you. But as long as you have constructive possession over gold and silver, and it is instant while you made that deal, it is considered Sharia permissible. Read Accounting Standard 1 of EOFI, which is available on the EOFI website. QBest is asking, what about there is conflict between Islamically classifying stocks as non-compliant and other website classified as compliant, or vice versa? The answer is very simple. You need to follow one criteria. The differences could be because of screening criteria, it could be because of miscalculations, or it could be because of plain simple errors, or it could be because there is one of the screening providers has a better guidance from the Sharia boards than the other. Irrespective of that, whatever it be, you need to pick up one app and probably follow that. So do your research as to which app has the best screening team, has the best Sharia scholars, has the biggest amount of experience, and is more responsive. Whichever app you think is the best in that sense, go ahead and follow only that. Do not try and mix and match. It will only lead to disaster. Shoaib Ahmed says, when you say 36 months analysis criteria that you use. So very, very nice question. I don't know. So he says that if there is 36 months average market cap, which has to be used for doing the denominator while doing the financial ratio filter, what will you do for IPOs? Very simple. For IPOs, we will have to take the market cap as per the books that they have given, as per the prospectus that they mentioned. So such and such number of shares, which is going to be priced at between this and this band. So we have to take the market cap according to that. And then on a daily basis, as the market cap gets updated, the trail of the market cap gets built. So it doesn't mean when it is not in existence for 36 months, it is not going to be classified as compliant or non-compliant. So you'll have to take, let's say, it's trading for 10 days, so it's 10 days average. Then on the 11th day, it will be the 11th day average. On the 12th day, it will be the 12th day average, and so on and so forth. Muhammad says, I want to create compliant portfolio based on sector, example, energy stocks. Does Islamicly support such a feature in the USA market? Yes, when you go to the Islamicly app, you can filter by sectors as well. So you can do an advanced filter, go to the sector as energy, and you can also go ahead and select compliant ones. It will give you all the energy sector compliant Sharia stocks. But yes, basis market cap weights, you cannot have a filter. We do not have that filter. Afsar says, your app confuses because you have mixed Canadian stock with US dollar, example MG. Afsar, that's not an error. It is because it is either a cross or it is an ADR. Adib says, which is the last question for today, I have invested in Wahid Index Fund. I received dividends from that fund, but how do I purify those dividends? It is as simple as that Wahid also does give you the purification amount. Just have to apply that and you are through. As simple as that. Nasir has put up a question again. If one trades stocks with margin, is there any purification procedure for interest on margin paid? If you trade stocks on margin using interest, the entire trade is considered non-permissible. There is no purification that you can apply. So intraday trading or margin-based trading using interest-based leverage is absolutely non-permissible. The entire return that you make is considered non-permissible. It is completely non-compliant. What is the key difference between app and desktop version? What is scrapbook function? The key difference between app and desktop function is desktop is easier to use. You can copy and paste a couple of things, whereas on the app, it's more on the go. Pro investors would like to do things on the desktop version. Plus, you have these two additional features, which is the historical compliance and the compliance risk factor on the desktop version. Plus, you have a couple of insights also, which is like top gainers, top losers, as well, which has been given out on the app on the desktop version. The scrapbook function is that if you have a portfolio from your existing portfolio, you can upload that portfolio and instantly figure out which stocks in your portfolio are Sharia compliant or not. Yes, it requires some amount of setup initially. If you have trouble using the setup, please get in touch with the customer support and they will help you. Someone says, I want to be portfolio manager with halal companies. How to start? Unfortunately, I'm not the right person. And all the best. Jazakallah khair, everybody. Afsar says, how much do I have to pay to upgrade my app version to desktop? Everything is available on the app. If you have any issues, please go and ask our customer support. They will inshallah be able to help you with all the payment options. If you're not subscribed, please do subscribe. And if you like what you heard today, please do give us a review on the App Store. This Ramadan, you will be doing us a big favor by, if you like us, you should definitely go and review us on the App Store. It will just tell the world that what we are trying to do, the amount of hard work we are putting in terms of bringing you this information. And we really humbly hope that you like it. And we look forward to your support in popularizing the Give Back campaign that we have. It's been an hour and a half this Ramadan. I would not want to take more of your time. All of this will be available as a recording on the Islamicly YouTube channel. Please do popularize and please do share the Islamicly Give Back Day campaign. It is our humble endeavor to give back to the society what the love that you guys have given us in just 1 year. Jazakallah khair. Assalamu alaikum wa rahmatullahi wa barakatuh.